What's going on, everyone? My name is Nicholas Merton here from DataDash, and hope you all are having a fantastic day wherever you are, because in today's sponsor review, we're going to be taking a look at a DeFi protocol that's aiming to build the decentralized exchange for institutional capital. As this year, the focus has been on the Bitcoin ETF and institutional capital coming into the crypto space, Aevo, the project we're going to be talking about today, is aiming to build a leading exchange platform that aims to take DeFi to the next level, offering not only perpetual contracts and other familiar derivatives in the space, but also options contracts, and allowing for you to do all this in a trustless and decentralized way, but also a hyper-efficient and low-cost way in order to operate with the services that it offers. So we're going to be talking about all this, a coming airdrop with the protocol that you definitely want to keep on your radar, and outside of this, well, some of the history behind Aevo, as it's not an entirely new project in the space. So we've got a lot to uncover in today's video. If you guys happen to enjoy it, consider dropping a like. Let's go ahead and kick things off. So first off, why Aevo here? Why is Aevo on our radar? Well, to take a little bit of a step back, it's important to understand that Aevo is not coming out of nowhere. It's actually being built by the team who had created Ribbon Finance. And Ribbon Finance has been around the crypto space for some time. Over the last couple of years, they've had a lot of success in building different types of option vaults. This was a really interesting and unique approach in the crypto space that allowed for people to essentially get some form of yield from various different passive vaults or ways or strategies of approaching the market to get yield. And they were able to see a lot of success in this original product. However, back a couple of months ago, back in the middle of 2023, they decided to start merging over from Ribbon Finance over to Aevo. And Aevo is this new platform that's not only offering a better user experience on some of the original core services that the platform offered, but outside of that as well is really aiming to take it to the next step, offering new features that you just couldn't get access to beforehand, and really aiming as they entirely gut the original infrastructure and now deployed on the optimistic stack as their own layer 2 rollup. This is going to allow for Aevo to be able to provide high throughput, high scalability, so that it allows for the kind of transaction volume that's going to be needed for institutional capital, as well as all the different services that institutions need in order to actually properly trade, but also importantly hedge in the market. That's a term that doesn't usually get talked about much in crypto, and this is why it's important to talk about how Aevo is building a platform not only for retail traders, but outside of that as well for institutional capital. It's a big dynamic here, because unlike the average retail trader, kind of everyday trader like you or I, who might be trading with a couple $1,000s or a couple $100 on a trade, we need to have a protocol that's actually going to work for the mainstream traders on Wall Street, those who are trading large positions or may need to hedge their existing positions, not just trade from one token to another on protocols like Uniswap. So why is hedging important here? What does it exactly mean? Well, hedging essentially allows you through options contracts to be able to protect existing positions in the event of a certain price fluctuation or move. So for example, the two main ones that most people are familiar with as we go over to the OTC section of Aevo is call and put options. Now, when it comes to call and put option contracts, there are really two different types of traders who would utilize this form of interacting with markets. We have your everyday retail traders who are looking to increase their risk reward profile, betting on a certain type of price move within a given window of time to the upside or downside, hoping to make even more than just simply going long or short the given asset. And this is very much similar to utilizing perpetual contracts or other forms of derivatives to increase your leverage or margin on a given position versus just trading in the spot market. But outside of this as well, there's also those who use call or put options in their original intended purpose, which is actually to mitigate risk for long-term positions. So when we take it from the narrative of an institutional investor, someone who may be, for example, holding a very large bet on, say, Ethereum as a position, they might want to purchase a put contract that will allow them during a set window of time to protect their position to an extent, to make sure that if, for example, there was a certain strike price, say $1,900, that Ethereum moved below, they would have the right to sell their assets at that given mark, and vice versa when it comes to a call contract within the expiration window. If I wanted to, for example, protect a short position, I could buy one of these various sets of strike prices and protect myself on my short position. So it's really a means of hedging. But if you wanted to, for example, go long a call option, you can do that. And essentially, if Ethereum goes above that call option price, those options, as the price of Ethereum continues to go above that strike price, could be worth a lot more from where you bought them, almost kind of building this exponential return there if you really get above that rate. But you're also risking all of your capital that you put towards contracts. So it's not advised to go all in on a call or put option with all your money. You can always use a fractional amount of capital if you want to make certain sized bets on a given window of time for the performance of an asset, but there's all types of different ways you can approach it. The main point I want to get to today is not to tell you that you need to trade options contracts through Aevo. My point here is that there is going to be demand for it from institutions so long as we continue to see the demand around the Bitcoin ETF and the broader crypto space and DeFi. And I think Aevo is well positioned here as one of the few platforms that actually gets this right and gives you that ability to get exposure through various different types of options contracts. But this is not really Aevo's main bread and butter. It serves as a perpetual contract platform, another form of derivatives that essentially allows you to trade a whole range of different assets based on their price performance and be able to not only trade a bit with leverage if you want, but outside of that as well, be able to access a whole range of different markets. Now, not only do they already have deep liquidity, which I really like to see, they have a good amount of volume in the exchange, a good amount of capital in the order books, but outside of that as well, they have some really unique features beyond trading the well-established names like Bitcoin, Ethereum, or Solana. They also have a category called pre-launch tokens. Now, this for me is one of the biggest selling points that Aevo has as a platform that you simply cannot find practically anywhere else in the crypto space. This essentially allows you to basically front run the launch of a whole range of token listings on the market for some of the new and hottest projects in the space. Some of you may recall in prior videos, I've been talking a lot about the fact that it's good to get ahead of the curve and focus on the new projects that are of interest right now, that are getting new eyeballs on them, that are building new tech stacks, not focusing so much on legacy plays in the crypto space. You won't get too far long term. And I think overall that while it's not guaranteed by any means that you're going to make money speculating on these particular pre-launch tokens, there's a good chance that if you find a play that has the right momentum, the right community, and you can see here within these pre-launch price ranges that you're seeing good technical patterns build up, you can definitely trade within ranges or take advantage of this pre-launch opportunity here to hopefully catch them before they hit the big exchanges or before they release big airdrops and initially launch their token on the market or decentralized exchanges. So this to me is a really cool feature that Aevo has here. And I think again is just further pushing the dime here on allowing for retail traders to be able to get access to opportunities before they're already on the exchanges, before they're already out there in the open for everyone to access and probably trading at a much higher premium or price in most circumstances. So this is again a really cool thing here that I think is again something worth exploring here. And you can get all the core analytics and details that you would find on a normal exchange, from being able to do technical analysis with TradingView tools, an active order book, being able to see depth as well as funding rates for more established cryptocurrencies like Bitcoin or Ethereum, and a whole range of other details and resources that you need in order to actually properly make sound trades. Now, a couple important notes to let you guys know about, although I again am here to let you guys know that with perpetual contracts, you can definitely trade with no leverage or very minimal degrees of leverage. The main thing I want to say here is that it's important to understand a few things. One, that in most cases when you're leverage trading, you do not want to put all your capital into a trade. And the second thing as well along with that is that you have to consider funding rates. Now, funding rates is essentially the rate you're paying in order to borrow capital. And there's a couple different ways to view this. If you want to view it on a 1 hour rate, an 8-hour rate, or annualized here, this will allow you to know what the cost is to actually borrow or basically go long or short on given trades. So funding rates can help you to spot discrepancies in the market, but above all, it's important to understand that if you're making bets on the market, you have to know what that funding cost is going to be, and it is varying over time. So these are some important things you can keep in mind. And beyond that as well, I just wanted to let you guys know here that there are strategies that are going to be coming soon. I think in many ways similar to what Ribbon Finance offered. But again, something that you guys should keep on your radar, as Aevo essentially is becoming this core central chain app that's going to allow for people to be able to access all these different types of markets. And speaking about this move from Ribbon Finance to Aevo, a lot of people probably may recognize Ribbon Finance not only from using the application in the past, but due to the fact that Ribbon Finance had one of the most valuable airdrops on average for users who received the airdrop back when it launched its token. It had an over $80,000 average airdrop. Some metrics read it at 70,000, 80,000, but generally speaking, you get the picture. They had a really big airdrop program. Now, in order to understand how to qualify for the airdrop, there are some great resources on YouTube, some great resources online where people are making predictions around how to be eligible for the airdrop, but it usually comes from adoption of the platform, trading volume, and participating on the exchange itself. And we can see here that airdrops are no funny business here, from major L2s like Optimism, other different types of decentralized perpetual contract platforms like DYDX, over 12,000. You can see here that this is something you should definitely keep on your radar here, guys, even if you're not coming with a lot of invested capital into the market. Airdrops can be a great way for you as an early adopter to help test out networks, become early supporters of projects, and be able to get rewarded for it. And it's important to understand who's behind the projects as well. Aevo has got backing from a lot of big names in the crypto space. They have Paradigm, Coinbase, Dragonfly, Nascent, and so many other big names here that are helping to scale Aevo into becoming one of the largest protocols in the crypto space when it comes to trading various forms of derivatives products. And whether or not you like to trade derivatives perfectly in the market, that's totally fine. It's something up to you. And I even tell most people to probably stay away from derivatives to a large extent. The important thing is that there is a business there. There's a need for it, even for professional institutional traders. And I think that this is going to be a very big narrative going into the next few months. I think that if there is continued success with ETF flows, and I think if there's going to eventually be an ETH ETF and other different ways where institutional capital is starting to garner exposure to this space, they are going to need ways to hedge against these sectors. And being able to do this in a trustless and decentralized way through platforms like Aevo, I think gets me really excited about the potential of where Aevo could go long term and the kind of markets it can service. So if you guys are interested to learn more about Aevo, I'll leave a link down below in the description where you can try out the platform, not only to trade it, but also just get a feel for the application and see whether or not you think that the protocol itself is worth checking out the token and the core protocol and what it has to offer. You can find all of that down below in the link in the description. But overall, I think it's a protocol that I'm going to be watching going into 2024 as it has continued to offer more and more options for people to be able to expose themselves to the market, but also to manage risk, to hedge properly, something that has almost not been in the vocabulary of crypto for the past few years in a predominantly retail-driven market. If the flows keep coming in from the ETFs, this is going to be a narrative and a topic to watch here. So that's it for today's video, everyone. Thank you all so much for checking out this video. And if you enjoyed the review, consider dropping a like. It's a great way to support the channel. I'll see you guys in the next one. Take care, everyone.